Markets are calm, but is it the calm before the decision day? Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the heart even blinks. Tonight's wave map is packed. Dollar index is quietly whispering a bottom. Candles from Euro, Japanese yen, and Canadian dollar weigh in. How do they stack up against the greenback? Bond market is flashing final alerts. Will yields explode or retreat? TLT. Do you hear what the candles are shouting? Oil just can't stop stacking bearish momentum. Gold and silver hit pause. Concerning or just catching breath? Uranium. Healthy pullback or trend reversal? SP 500. Full multi-angle review. Candles, waves, sectors, and the big caps. Nasdaq. A cleaner Elliott Wave path is finally visible. And our feature of the day, live Elliott Wave analysis of Berkshire Hathaway, you don't want to miss. Got a ticker you want charted next? Drop it in the comments. We might do it live. For high conviction setups posted daily, join our private Discord where Master Trader Kyle delivers surgical entries and exits. Free reader subscriptions are now available on investingangles.com. Come see what's moving before it moves. Now let's dive straight into the charts, starting with volatility. This is the candle closure of today. What we are seeing here is a very interesting point. So generally, what we are seeing is that on the daily frame, index failed to complete a reversal, but by just few basis points. So today it closed at 30.11. For completing a reversal, it needed to close below 29.99. So technically 12 basis points lacking. I think it's gonna be a big thing tomorrow. And if we look at the futures, a very similar situation, although a different candle pattern. So what we are seeing is 1, 2, 3 failures of reversing, and most likely it's going to be a rising 3 methods. So after this, we would be looking for a candle in that direction. So maybe somewhat similar to the green one here. And it might start as early as tomorrow. If we look at the bigger frame, 2-day frame, a similar situation. So 2 days failed to close, to reverse on the Harami candle, and now the odds are bullish here. The same thing on the futures, absolutely similar conditions. And I'd like to remind you, this was the closure of the week. Last Friday, the big candles, even though they were big, they were not sufficient for a reversal. These were called incomplete dark cloud covers, and most likely they have better chances to resolve upwards. And the final chart for volatility, this is the flag that we were discussing previously. What I'm seeing here is that the wave that volatility index is forming, potentially getting to its final steps, and I would be looking for this particular pattern. So this would be wave A, this would be wave B, and this would be wave C here. So once it is complete, and I think that this rectangle is an ideal target for this one, we would be looking for a move higher. I would say that once we have a bottom completed and confirmed, I would adjust these targets, but not much, just slightly. Maybe it will be 60 to 80, something like this. But let's get the bottom completed and confirmed first. That's the volatility. It's quite impressive closure. On the last closing minutes, it failed to complete a bearish reversal on the daily and 2-day frames. I think it is significant. Now let's move on to the currencies. Dollar index. What we are seeing here is a very interesting formation. So this is an inside up. Potentially it is already above yesterday's high or not yet. It's 0.4 basis points required to push it higher above yesterday's high. Anyway, in both cases, whether it's above yesterday's open or yesterday's high, it will be bullish and potentially strongly bullish. If we look at the 2-day frame, which is also closing in 2 hours 30 minutes, this is a very good chance for a bullish harami candle. And speaking about this bullish harami, there is a very significant chance that dollar index hits at the bottom another lower low first, and then it rallies upward. Let's see how it develops overnight, and if I see anything interesting, particularly from the Elliott Wave perspective, I might do a quick update for our subscribers on investingangles.com. Well, the similar situation for the weekly, but weekly it's still 2 days away. We will wait until we see a clean closing print. So this is the chart that we've been tracking since the end of March. Nothing changes here, so I'm still expecting a little lower low here. However, if dollar reverses here, it would be absolutely fine because it's already below the low of July 2023, and technically it would be a rather ideal pattern here. Now if we look at the large frame, long-term frame, nothing changes here as we discussed it last time. Potentially this is wave 4 being completed right now, and once it is done, we would be looking for a very serious rally towards 1.13, 1.20. Just keep this in mind. Now, once we are looking for a dollar bottoming, it's interesting what the other currencies are telling us from the candles perspective, and I would touch point on the Japanese yen and euro and Canadian dollar today. So let's have a look at euro first. Euro is, well, it's dangerous because it is forming right now. It formed yesterday a harami candle, totally outside Bollinger Bands, and today, no surprises, it's a bearish engulfing, a complete bearish engulfing. If we see a confirmation tomorrow, well, that's gonna be a reversal. The weekly frame is also kind of concerning for the candle that is being formed right now. So there is no confirmation, but I think we might have very significant news by Friday. Now let's have a look at yen. Technically, this is a reversal pattern. However, it is not confirmed. We have an inside candle yesterday. Today we have a harami inside another candle. So we have a double insert here. And if tomorrow or the day after tomorrow we see a strong move upward, closing above Friday's high, that would be a big reversal for the yen. And the weekly frame so far, it is looking to form a bullish harami. Let's see what it does in 3 days. And the final one I'd like to touch point is the Canadian dollar. What we are seeing here is so far no decision yet. We see a harami candle potentially spinning top, and the candle today is not likely to close below the low of the green candle. So we might need another candle for forming a bearish combo here. And the weekly, this is 2-day frame. Tomorrow closing is potentially with a bearish engulfing if it goes a little lower here. Well, that's the perspective. Nothing is confirmed, but there are quite a concerning moves. Now let's talk about the bond market. And we will start with the yields. So in 1 hour, it looks like this is going to be a closure. Let's see, it's still undecided on the 8-day frame for the 10 year, but let's start with 20 and 30 year. So these candles are sitting way on the support line, 8 days EMA, and the formation technically is a deliberation. So it could be a bearish, it could be a bullish continuation formation if we have a strong confirmation tomorrow. So that's would be a very strong move. And if we look at the 8-day frame, which is also closing today, I'd like to emphasize these two are by far the most bullish here with this closure. So it's a total engulfing of the red candle. The same for the 30-year yield. So the 10-year yield is still thinking. So it's getting close here. So if it closes above the open of the red candle, it would be a strong bullish engulfing. If it closes like this, well, it still be a fairly strong piercing line. Well, that's the perspective for the bond market. And now let's have a look at another frame. So this is the 10-year yield. What we are seeing here is that candle is still sitting on the 8-day and 50 days moving averages, gaining strong support. So this reversal is not confirmed and highly unlikely to be confirmed today. The 2-day frame formed 2 days ago on Friday, 3 white soldiers, and this candle obviously is not sufficient to reverse it. It is still a bearish harami, and we might see a continued decline. However, we need a very strong confirmation here. And the 3-day frame today is closing with an incomplete dark cloud cover, which is likely gonna be bullish continuation candle. Everything is moving slowly here, and this is what is normal for bond market. Well, so far it's slowly building bullish momentum, and I would like to emphasize just to show this one, 8 days is already bullish, and I would like to say it's a strong bullish. Now let's have a look at the 20-year yield Elliott Waves. Chart practically remains the same, so this wave up has been mostly impulsive, and the way down is corrective. Which one is gonna be, which one will take precedence? It's still unclear, so it could be wave 2, extended wave 2, especially if it makes a new lower low, which will automatically invalidate the first wave of the red count. However, if it holds and it doesn't cross below the April 9th low, then we would be looking for another impulse upward, 1, 2, 3, 4, 5, and this would be wave 3 here in this case. Well, but again, we need to have a very strong and clear confirmation. Now let's move on to the next one, and next one is TLT. So TLT today had a chance to form a bottom on the daily frame. However, it miserably failed, and now it is looking for falling 3 methods. These 3 are not sufficient to reverse this one, and the next candle is likely to be down. We might see a very complex formation here, but a very simple one would be just the next candle down. Unfortunately, we don't have momentum here, momentum readings on this other frames like 2, 3, 5 days, but we have a 10-day frame, which we still remember it closed yesterday with a very strong tower top, and now it is moving. It is trying to consolidate or even move a little higher, but tower top is tower top, and the weekly frame of last week was also strongly bearish. So nothing bullish in the picture. If we look at the chart, it also remains unchanged. There are still 2 possibilities here. Either this is A, B, C of bigger wave 2, which is possible, or this wave A was actually the alternative wave 2, and we are looking for a 1, 2, 3, 4, 5 next impulse down, which would be something similar like this. And this would be for the green count. Yes, this would be something like this. But we need to see a reversal first before we chart the targets. And the final chart for the bond market is this one. It's quite concerning. So this is the 10-year minus 2-year spread, and this is the 3-day candle, which is closing today in 57 minutes. So far, it's a very strong dark cloud cover. Whether it moves a little lower or a little higher, it wouldn't really matter. And I would say that there is a very good chance that by the end of the week, we will see another red candle confirming this reversal. And this is the chart that we've been tracking for a while. So far, it looks like if we see this really strong candle, it could be a big reversal for an ending diagonal. Well, now let's move on to our commodities, and we will start with oil. So what oil tried today is another attempt to breach the resistance at 8 days EMA. Unfortunately, it was rejected and it formed another indecisive doji. Trends and odds remain bearish here. On the 5-day frame, which is closing in 26 minutes, this candle is most likely going to be a consolidation one. However, based on some technicals, I would expect this probably could be a bigger consolidation, something like this, maybe slightly higher for a couple of periods. Each candle is 5 days, so maybe another 2 weeks of consolidation, and then the move downward. And the 15-day candle, no surprise, it closed with a strong bearish candle today. Bearish continuation candle. So we can remove this unnecessary element here. So oil is bearish and continue to build bearish momentum on the midterm frame. If we look at the short-term oil chart, what I'm still seeing here is that potential for wave B, the bigger wave B, something like this, maybe then another wave C, and after that we will have a move down, another move down. However, if there is a very strong momentum, we might see an immediate move down right from here. So one way or the other, oil is bearish. And an interesting closure today for Brent. I would say that in 24 minutes we will see a neutral candle on the daily frame, but what is interesting is 2-day frame. This is a clear advance block formation. We have 3 candles stacked one on another, each with a smaller body and the bigger upper shadow. So I would expect a candle down the next one, especially if the next candle forms a bearish engulfing. This would be a done deal. That's all for oil. Now let's talk about precious metals, and we will start with silver. So an interesting and very dangerous candle here. So it is closing in 1 hour 23 minutes, and I would say it's more dangerous if it makes a little green doji here. In this case, it would be an advanced block, somewhat similar to what we just discussed for oil for this one. Right, so, but let's see. The red candle would also be bad, especially if it moves just a little lower here. It would be a bearish engulfing. On the 3-day frame, this formation for silver is not very assuring, because the two candles, they technically failed to reverse this red candle. We might see another one, another green one, and after that we could see a move down. And I wanted to highlight that silver is very bearish on 8-day frame. Technically, it formed on Friday, it formed a tower top. And now it can try to negate it for several periods. However, I would say the chances are fairly slim at this moment. If we look at the chart for silver, I was looking for an impulse down, and this wave has been most likely corrective. So far, it is levitating here in this target area that I outlined way back in April 10th. And so far, it looks like it is forming an ending diagonal here. At the micro level, it definitely looks like it. Maybe another little higher high and then a strong move down. If silver closes, moves below this green line here, which I identified, and this line, let me mark it as high, 30.7791. 3791. So if it breaks below this line, it will invalidate the potential green impulse here. And in this case, we will be looking for a very strong wave down, potentially making a new lower low below 28 or lower. That's for silver. If we look at the SLV trust, which closed just a few minutes ago, what we are seeing here is indeed an advanced block formation. Very good chance that we see a red candle tomorrow. How far, how big, it's not clear yet, but the chances for a red candle are very significant. No other frame closed today, so these candles we are just tracking. And the final chart for precious metals. I'd like to talk about gold, and not gold at GLD trust. Gold candles are not decisive yet and nothing to discuss there, but the GLD is important because, first of all, this candle on Friday was very special, and we can see that GOD tried to negate this candle for 2 days, so far unsuccessfully. And in combination with three clear gaps, which are still remain unclosed, this is a very dangerous condition. 2-day frame yesterday formed potential spinning top. If we see a red candle tomorrow and it closes below the close of the previous 2-day candle, it would be a strong reversal potential. Well, that's all for gold and silver. Now let's move on to uranium. And today I will talk about energy fuels only because it has the most dangerous or concerning candles. So what happened today? It formed after yesterday potential spinning top. Today it technically confirmed the spinning top with the bearish engulfing, and this might be a very significant move. If we see a momentum escalating on bigger frames, we might start talking about this rally being over. So far, 2 days and 1 weekly frame are not very clean, and weekly after last week closure with bullish engulfing still had a chance. However, if we look at the bigger frame, 2 months for example, the odds are clearly bearish right now, and this particular rally could be just a bounce that we registered. Now if we look at the chart is somewhat promising from Elliott Wave perspective, because I'm seeing an impulse here, 1 2 3 4 5, and wave 5 is the longest, so that's the most typical for the commodities. If this hypothesis works, then we should see a reversal, potentially for a zigzag, wave 2, and if it wraps up and forms a clear correction and starts another wave down, wave up, we would be looking for a much bigger rally. So far, it's not decided yet, but something to keep in mind. Now let's move on to our stock market, and we will start with candles. The candles today closed somewhat neutral. The daily candles, they're stuck between 8 and 20 EMA lines, and at this point we need a strong confirmation. So it could be bullish, it could be bearish. This is the concerning part. The freshly made 50 over 200 bearish crosses. However, they might be an exhaustion cross, and we might see a move a move higher. So this is the daily picture. However, if we look at this one, this is futures, and they are closing 8-day frame today. So this is the most concerning one. And these candles are technically neutral dojis for S&P 500 and for Nasdaq. For Dow Jones, it is a bearish candle. It has more bearish qualities, and especially for Russell. So these have better chances to continue downward. So far, I would say yesterday we had a 10-day closure, very strong bearish continuation candle. Today we have 8-day, which is somewhat neutral bearish. I would say that the bearish momentum is increasing for the indices. We are not seeing a reversal yet, at least a significant reversal. And this is something to keep in mind from technical perspective. This is the 8-day closure, which the candle that closes today, and this is the MACD chart. Obviously, we had MACD cross, and we discussed numerous MACD crosses. However, this is a very significant one. If you look at the magnitude of histogram here, it is right now at the record low level. This is something, and it's lower than 2008, lower than 2000, 2018, 2020, and 2022. So, and it's not reversing yet. That's the most critical part. So just to give you the perspective, so we might be looking for a correction which could be stronger and bigger than these indicated on the screen. Let's move on. This is the Elliott Wave of the entire correction that started in the middle of February. Potentially it's a wave A, B, C of the first wave downward. The wave upward has been corrective so far, and I am looking for two potential paths here. First is an A, B, C of a bigger B, or this could be an even bigger correction. So if this wave is A and this wave is B. So that's another perspective. However, there is also a chance that this is everything that we might have for wave B, and we might see a very strong and sharp move down, somewhat similar to what we've seen in 2020 in February and March of year 2020. I would say that this is so far of a lower probability, but it is on the table. Now let's have a look at the final wave. So this is the wave at the micro level, 15 minutes. What we are seeing, a strong bearish flag, and there is a chance that this diagonal has been completed already. If it is, then we might see a very strong move starting tomorrow. And if this was indeed a wave ABC, and this diagonal failed to make a new higher high, in this case it would be considered a truncated one, and the bearish odds will be even stronger. However, the chance for another wave down for completing an alternative B are also on the table. So one way or the other, this is bearish. The question is how exactly this wave completes and how fast it moves to a new lower low. Now let's have a look at the sectors. Sectors are split, and the most concerning one is technology. What we are seeing here is an advanced block, and the chances for a red candle are substantial for tomorrow. Healthcare, a clear bearish engulfing. Consumer staples are somewhat neutral. We need to see another confirmation, either upward or downward. Staples, consumer staples are formed a dark cloud cover here, and the hammer for utilities. For energy is a gravestone doji here. Well, everything is bearish. Financials still holding on the 200 days moving average after the 50 over 100 days cross. And we discussed yesterday in yesterday's video potential for forming a flag, so you can review it there. And the industrials are somewhat neutral, leaning bearish, and I'd like to say that 50 over 200 days fresh cross, bearish cross. So that's the perspectives for the sectors, and now let's talk about big boys. Big companies. Meta expectedly is moving lower after yesterday's bearish engulfing. Microsoft looks like it is turning down. However, I would like to see a confirmation in either way. Amazon is bearish right now. It got rejection at 8 days EMA. Apple failed to form anything bullish. Right now it's neutral bearish. Tesla is still holding somewhat neutral. Google is bearish, and Nvidia is somewhat neutral. An interesting closure for Berkshire Hathaway, which we will discuss in the next chart, and we will try to form live Elliott Waves. So let's move on to the feature of the day, Berkshire Hathaway. And this is the chart. So what we are seeing here is quite simple. So this was the top on April 2nd, and it was impulsive wave down. Now if we put the numbers here, we might see a very clean picture. So this is most likely wave 3, this is wave 4, and this would be wave 5 down there. So that's the very first impulse down. Now we know that impulses down are never single ones. Another one must come, one way or the other. That's an Elliott Wave perspective. Now what we are seeing here is the wave upward, and it looks like this, a very nice bearish flag here. So whatever way it breaks, so most likely it's an A, B here, and the C is forming an ending diagonal or already formed. Let's place some letters here. So this is wave A, most likely this was wave B. And now we are looking for wave C of wave 2. Well, this is the perspective, and now what however, I would like to keep both bullish and bearish perspectives on the table. So this could be wave A of a correction, and this could be wave B of the entire correction. So in this case, we would be looking for the next wave is wave either C, or it could be wave 3, but wave 3 would be much longer in our case. So now let's try to measure and see where we would be ending. So I'd like to get a bigger perspective here. So this would be our measuring tape, Fibonacci. So what I would be looking for is for wave A, oh pardon, for wave C, most likely would be in this rectangle. So this would be the target for wave C. And for wave 3, it would be a much bigger target. So somewhere here. So this would be for wave C, and okay, maybe I'll move it like this. So basically, once it crosses into below 438, I would be saying that this is most likely gonna be wave 3. So these are the targets potential, and I'm just making them very approximate. So in this case, we would be looking for two potential waves. One wave is gonna be down here. This would be for the red path, and another one would be for the blue path. That's the perspective for Berkshire Hathaway for the next couple of weeks. This is a fairly nice bearish setup, and this level here is 539.93. 539.93 is an invalidation level. 539.93 is an invalidation level for a potential short. So let me remeasure it. 539.93. Well, this is the chart. This is the perspective chart for Berkshire Hathaway for the next couple of weeks. So if it is lucky path and Berkshire forms just a short impulse and reverses here and moves upward, well, that's a lucky path. However, if it moves down here, we would be looking for a bigger wave down. Potentially this would be wave 4, and somewhere down there would be wave 5. And if it happens, it would be just an impulse of a higher degree, which I would consider the first impulse of an even bigger correction, which could be either wave 1 of a bigger correction, or it could be wave A of a bigger correction. This is the Elliott Wave perspective for Berkshire Hathaway. I hope you enjoyed it, and if you like it, please just say so. Hit the like and share the news around. Now the final chart of today is Nasdaq. What we are seeing here is very similar chart to what Elliott Waves are forming for S&P 500. We have a bearish flag and a potential ending diagonal here. However, I'm not seeing the next move higher. If it does it, it will be a classical ending diagonal, especially if it makes it a little higher above this wave A here. However, if it fails to do so and sharply moves down, it could be either wave 1 to wave 3 of this particular impulse. 1, 2, 3, 4, 5. So I'm not using a very good scale here. Obviously, it would move lower. However, or another possibility that this is a truncated wave C. So it fails to move to make a higher high and truncates here. It will be even stronger move down. Well, that's the perspective for Nasdaq. And this is all I have for today. And now let me wrap it up. So from the dollar's quiet pivot to Berkshire Hathaway's unfolding wave map, today's session laid the groundwork for decision day. Yields are rising, oil is tumbling, and precious metals just blinked. The candles told the truth. Did you catch it? If you're tired of chasing noise and ready to trade with structure, timing, and statistical edge, you know where to go. Investing Angles, the home of Elliott Waves, Candlespeak, and deep multi-frame setups. Got questions? Drop them now. Drop them below. Smash that like, hit subscribe, and share it with your trading crew. Because timing is everything, and the turn waits for no one. Until next time, stay sharp, stay objective. And remember, at Investing Angles, we chart the turn before the herd even blinks.